Hi, Louis. The Treasurer has acknowledged financial markets are pricing in 4 more interest rate cuts this year and as much as a 50 basis point cut at the next May meeting. What are the implications for house prices?
If we were to actually receive those type of rate cuts in quick order, I believe we would see a fairly strong recovery in the housing market for the second half of 2025. The response time would be in the order of about 3 months after the next rate cut, in our view.
What do you mean by a strong recovery, and which markets would see the biggest impacts?
I mean by the fact that it's likely we would see housing price rises at an annualised rate of increase in the order of about 9 to 11%, depending on how many interest rate cuts we actually get and what else is actually going on with the economy as well. So one of my big assumptions in this is that unemployment doesn't rise beyond 6%. If we were to see a rise beyond 6%, so in other words, the economy goes into recession despite the rate cuts, then no, I don't think we would see a recovery in the housing market at all, because you would actually see a lot of forced selling in the marketplace. So that's what I mean by that. When it comes to which cities, definitely our largest cities. So the cities which have been experiencing a housing slowdown/downturn have been our 2 largest capital cities, being Sydney and Melbourne. And they are the 2 cities most sensitive to interest rate changes. So if we were to see a more dovish a move by the Reserve Bank of Australia, I think they are the 2 cities where we're likely to see the largest response.
Okay, but you do acknowledge that there are potential downside risks. Let me ask you this. Treasury modelling has estimated the hit to Australia's GDP as a result of the Trump tariffs at 0.1%. Does that seem a bit optimistic, given how exposed Australia's economy is to China's, with that economy facing an effective tariff rate of some 70%?
Those budget assumptions I think, are taking into account the direct impact of the tariffs, but perhaps not the indirect impact of tariff increases. As you rightly say, what actually happens to the Chinese economy certainly would have a huge impact upon our Australian economy if we were to see China go into a deep recession.
We've talked a lot about the Bank of Mum and Dad supporting first home entrants. Can you see the strength of that support faltering if there is indeed a hit to the wealth effect, perhaps in line with declining superannuation balances?
Yes, so there is one factor we do need to consider. If we were to see superannuation balances continue to fall over and above what we've already seen, no doubt that would impact upon the Bank of Mum and Dad in terms of their ability to provide funds to their sons and daughters. Yes, there potentially could be an impact. I think that would be offset by interest rate cuts. And I think the economy would respond if the Reserve Bank of Australia were to move quickly. The economy would respond to those cuts. I think a lower Australian dollar also helps buffer the economy from tariffs and other slowdowns which are occurring across the global economy.
Interesting times. Louis Christopher, terrific to talk to you.
Nice to be with you once again.